ETFs, otherwise known as exchange-traded funds, are one of the most popular investment choices for beginners and experts alike. But why? Let's find out. As the name suggests, exchange-traded funds are a type of fund which can be traded on an exchange. Still not clear? Let's break it down further. An exchange, or stock exchange, is a facility where stockbrokers and traders can buy and sell assets such as bonds and stocks. The London Stock Exchange near St. Paul's Cathedral or the New York Stock Exchange on Wall Street are world-famous examples. The physical stock exchanges still largely govern the stock markets. We'll find out why that is later. Fortunately for all of us, in the internet age, we have the ability to trade on those exchanges digitally from the comfort of our own homes. A fund, in the most simple terms, is a pot of money used to invest in securities such as stocks and bonds. Bringing it all together again, an exchange-traded fund is simply a special type of fund which can be traded on a stock exchange just like a stock. Whereas other fund types, such as mutual funds and index funds, are only traded once per day at the close of business, but exchange-traded funds can be traded an infinite number of times in a given day, just like a regular stock. Earlier, I mentioned the physical stock exchanges still largely govern the stock markets. Why is that? Well, the stock exchanges, just like regular businesses, have opening hours. The London Stock Exchange, for example, opens from 7 AM until 5 PM GMT, but the trading hours are only from 8 AM till 4:30 PM. On the London Stock Exchange, an ETF can be traded freely for around 8.5 hours per day, but once the stock exchange has closed, trading is over until tomorrow. Amazingly, they stay closed over the weekends. What are the advantages of exchange-traded funds? ETFs can be bought or sold as often as desired while the stock exchange they exist on is open. One huge benefit of this is that the price you see when you click buy is the price you'll get. Like an index fund, ETFs are passively managed and therefore have lower fees when compared to actively managed funds like mutual funds. Because ETFs are a fund, they can be highly diversified out of the box. However, it's always worth checking the breakdown of the fund, as this is not always the case. Many ETFs will allow you to automatically reinvest dividends just like an index fund. However, again, this is not always the case, so it is worth double checking. What are the disadvantages of exchange-traded funds? Each transaction has a fee. Unlike an index fund, ETFs have an additional fee to pay because they are bought and sold just like a stock. You can, however, get around this by using a free trading platform like Trading 212, link in the description. Time for the big question. Should you invest using exchange-traded funds? I believe ETFs have a place in all portfolios, and they're a close second just behind my favourite portfolio builder, index funds. I personally use ETFs as satellite investments, while index funds make up the bulk of my portfolio. ETFs can be a great way to invest in specific markets such as oil or more unique markets such as renewable energy and gaming. ETFs like the ones I've just mentioned are realistically not diversified, so I would not use them as a primary part of your portfolio. One word of warning is that exchange-traded funds do lend themselves to day trading, and some investors can get caught up in chasing short-term profits, which may ultimately lead to long-term losses. Be honest with yourself. If you're likely to become obsessive about the daily growth or decline of your ETFs, it might be better to stay away from them. Finally, if you find an ETF you like the look of, make sure to do your research and read the documentation on the provider's website. Let me know in the comments what your favourite ETFs are. As always, thanks for watching Money Champ. Don't forget to click subscribe.